in terms of where we are and where we may be going from here. He says, among other things, the rest of the world is significantly cheaper than the U.S. stock market. So he agrees, I think, with Joe Terranova. He says it's undeniable that the stock market has been supported by QE. I think we'd all agree with that. So expect headwinds for the stock market with Fed tapering, not predicting a recession yet, but expect recessionary pressures to build. Pretty powerful flattening. Yield curve is approaching a point where it signals economic weakening. At this stage, the yield curve is no longer sending a don't worry, be happy signal. It's sending a pay attention signal. Remains to be seen if Powell will follow through on promises to do everything it takes to get inflation under control. Jenny, what do you make of what Jeffrey Gundlach is saying? By the way, we're going to speak to him in person next month at the Super Bowl. I can't wait for that. So you'll hear from him directly, but here it is a few weeks ahead of that. What do you think about it?
So when I first read these comments, I thought, oh my God, I agree with Gundlach. I never agree with Gundlach. And then I started thinking about the fact that he's basically a permabull. And if you're a permabull, you fall into that category of a broken clock is right twice a day, right? And so I think that's a bit where my agreement comes in right now, which is I am cautious.
You think Jeffrey Gundlach's
Perma-bear, thank you. No, Perma-bear. I'm so sorry. Thank you for correcting me. But for the most part, thank you so much for correcting me.
Trying to get our interview canceled like 3 weeks prior to just tease the whole thing.
I'm so sorry. No, but he's, generally bearish a lot of the time. And so for me, agreeing with him is not, I don't think is not, wow, we're both bearish at the same time. It's that he's generally bearish and I'm cautious. I wouldn't say I'm bearish, but I'm cautious. So I read his comments and I totally agree. And I also thought it was interesting that he focused on the Europe part and that Joe focused on the Europe part or the international part, because I completely agree with that too. I think that there's a lot of value there and we have a market that's skewing towards value. So I agree. There are a lot of headwinds coming our way, and Gundlach highlights them really well right now.
Joe, do you think that we have some significant headwinds ahead with the tapering? Or, I mean, isn't it in the market already? It seems to me the only question at this point is where are rates going, and how many times is the Fed going to hike rates in calendar year 2022? The tapering's like old news at this point.
Agreed. So what do we have? 90% probability of 4 hikes right now. That's what the market is pricing in. Got a little bit of comfort yesterday in his messaging that the balance sheet runoff was going to be handled in a conservative way. Maybe that made the market feel better. But, Scott, I'll tell you one thing that no one yesterday mentioned that Senate confirmation hearing, and to me is the single most important inflation wildcard for 2022. Look at the price of oil. Price of oil is approaching $83 right now. 83,
yeah, 83.
Scott.
We'll call it 83.
11% higher for natural gas today. You're going to tell me the Federal Reserve isn't going to have to be hawkish in 2022 if the price of oil is sitting where it is right now? So I think that's the biggest indicator.
Well, it's no wonder that in our stock summit you had multiple people on the committee pick energy as their leading sector this year to back up a great year in 2021, Doc.
Yeah, exactly, Scott. I mean, inventories were at a, 4-year low for crude oil, to Joe's point. I think the car prices and the used car prices, as well as homes, are going to be more of what the Fed pays attention to, Joe. I think, obviously, this is a significant input, the price of crude oil and the resulting distillates. But higher interest rates aren't going to affect that as much as they will affect those used autos, new autos, and homes, in my opinion, Scott. And so that's why the Fed has no choice. They have to talk like a hawk, and they will continue to do so. If they get help from the market somehow, then I think that they could back off a little bit. Otherwise, they're going to have to make it seem like March is the day. March will be in play. And if that is indeed the case, then you're justifying the 170 to 190 area for that 10-year.